Can European stocks decouple from the difficult European economic situation?
It's a good point. As individual stock pickers in equity markets, we at Aberdeen think that we can find those companies which are going to take advantage of the opportunities available to them on a global basis. If you think about the macroeconomic scene in Europe, it's pretty difficult at the moment. There is a lot more austerity to get through. Life will be very, very tough for the next few years. But we think we can find companies with very strong business models which are selling goods and services to their global client base and will be able to generate sufficient cash flow over the next few years. And we're talking a good 5 to 10 year period here. And we think that we can find those companies which will generate good shareholder value, yes.
European companies have lots of cash. You think they will deploy their cash a little bit more?
Yes, well, certainly companies have been looking to build up their cash reserves. It was the global financial crisis in terms of a debt crisis that got them into trouble in the first place. So they're looking to make sure that they're not overextended in terms of leverage. So there has been debt deflation. A lot of companies have utilized the recession to their advantage to build up their cash reserves. The good thing about that is that it's given management opportunities as to thinking about what they should do with those cash reserves. They could well do M&A activity. We have to be careful about that because they need to do the right M&A activity for the right reasons. They might look to expand their own operations. They might like to spend more money on research and development, a bit of product innovation, getting closer to their customers, etc. And then perhaps there is that opportunity of thinking about sharing the spoils of their wealth generation with outside shareholders. So they will need to fixate a strong dividend policy, perhaps a progressive dividend policy. So when we're thinking about companies, we are thinking about dividends. Dividends can only be paid out of cash reserves. You can't fudge, in an accounting sense, the cash position of the company. And those dividends and the management's attitude towards minority shareholders in terms of sharing that wealth is a crucial element as to whether or not we will commit capital to a company. But in the future, yes, we think dividend increases will be a par for the course, yes.
Is there any value in the financial sector complex?
Yes, banks in particular. Financial sector is a very wide sector. It includes real estate companies, it includes insurance companies, fund management companies. And so your banks are one part of financial services. When we analyze banks, we find them very complicated financial institutions to analyze. They are incredibly complicated, difficult. Regulation is just going to get worse and worse for them. Effectively, if banks, and a lot of the investment banks are feast or famine type vehicles, and if it is a feast and they do make money, the first thing they'll do is pay themselves more. I'm afraid that's an attitude that bankers do have. The other aspect has been in terms of the socialization of the debt. So a lot of the banks are owned by governments now, particularly from a UK perspective, so we need to be aware of that. But yet we can still find some banks which are quite traditional, quite conservative, which are well-funded, strong deposit bases, which are doing simple things, borrowing at the short end of the curve, lending at the long end of the curve, making a significant margin for themselves, and being quite prudent in terms of their provisioning policy. So those are the banks that we would tend to be investing in. Alternatively, some banks that have overseas operations, and I'm talking about emerging market type banks, the Standard Chartereds of this world, the HSBCs of this world. These are strong, financially strong banks, so we're quite comfortable investing in those. But there are a number of banks that we, at the moment, would not get tempted to buy because they are too complicated, they're government owned, and we can't trust how much money they will be making over a 5-year period, and therefore we can't value them. So we would tend to allocate our shareholders' capital to other opportunities that we have in the market.